We're joined by Rich Greenfield of LightShed Partners. Rich, great to speak with you. You recently initiated with an $8 price target, a sell rating. I know on Twitter you've been getting a lot of, well, flack, let's just say that, hate, you know, so many different words apply to the response that you've gotten. Why do you think Fubo is one of those highly charged names?
You know, I think this is one of those cases where there is a big discrepancy between what this company is and what retail investors seem to think it is. Institutional investors know very well this is a vMVPD. So this is virtual multi-channel video program distributor. So think Comcast, but without the wires. And there's lots of them. As you can see in the background behind me, YouTube TV, Hulu Live, Fubo, these are all the same. They basically have the same channels. They all do the same thing. None of them really make money. They basically are all in the business for other reasons. Fubo's problem is this is their only business, and that's just not a very good business.
So you were joined today in terms of the short thesis on Fubo by a hedge fund, Kerrisdale Capital, which helped pressure the stock in addition to this lockup expiration. What happens to a name like this that's driven primarily, in your view, by retail sentiment?
You know, we talk to obviously a lot of investors. We have, you know, a pretty good network of subscribers at LightShed over the last 15 months that we've built our business. We have yet to talk to an institutional investor that wants to own this stock at this valuation. So it really leads us to believe that almost all of the buying has been overzealousness among retail investors who think this is Roku or think this is Netflix or think this is DraftKings or FanDuel. And unfortunately, I feel bad for them. They're just wrong. This is just a troubled virtual vMVPD. And the key here is this company couldn't raise capital. I love the founder. They've done an incredible job building a business with on pennies on the dollar. Like, they've done a great job building this, but the valuation just doesn't make any sense. And I said, I've been doing this job for over 25 years. I've never seen a more compelling short than Fubo at the valuation that it is today, let alone where it was a week ago before it started falling.
Hey, Rich, it's Dan. Thanks for joining us. You know, your commentary has been really interesting on this name. It's been a frenzy, and we talk a lot about frenzies here. But it's not just little names like this. You know, Disney is up 50% in the last 2 months. So when you think about, you know, Disney obviously primarily owns Hulu here. What do you think is going on in the space in general, and in Disney in particular? Are investors placing too much emphasis on Disney Plus and these streaming assets?
Look, where we've gone wrong in Disney for sure is that investors have basically overlooked the 2 worst quarters in the company's history and purely focused on the opportunity of Disney Plus and really looking at Disney Plus as the potential to be something much, much bigger than it is today. Forget about the $5 ARPU today. They're looking at the long term and what was an incredible array of content at their analyst day. What I think has gotten confused with Fubo is not an SVOD company like Disney Plus or Netflix. It's a 455,000 subscriber, very small company. I mean, Sony had 800,000 subscribers and shut the business down at the end of last year. It was called Sony View. AT&T has shut 1 million subscribers over the last year because this business doesn't make money. It used to be called DirecTV Now. You may remember it was a big hot vMVPD a year ago, and they basically have been shedding subscribers over the past year. This is just not a good business. Mm-hmm. The only reason Hulu's in the business is because there's a much larger business called Hulu SVOD, which is almost the entire value of Hulu is their subscription business. Think of Handmaid's Tale and all of the on-demand programming they have. They're not in this to make money on the live TV service. YouTube TV, which the screenshot behind me has Sports Illustrated calling it the best way to stream television. Yeah. That business is because YouTube sees a much larger play in advertising tied to the YouTube ecosystem, not because they love live TV.
And just quickly, Rich, we're out of time, but just to button up, if Fubo is on one end of the spectrum in terms of streaming plays, in terms of being overvalued where it is, what's the best opportunity?
Look, I think if you have viewers that are looking to play the wave of people being locked up during COVID, who are really looking for ways to make money in the streaming ecosystem, there's no better stock than Netflix. And it just continues to be a stock that's going to continue to grind higher day after day, especially to the extent that the pandemic lasts longer than we think. And we're also seeing, I mean, sort of all of Hollywood is starting to realize that they have to release movies direct to consumer. Right. That really plays into what Netflix's big story is for 21, which is the movie business.
Shepard Smith here. Thanks for watching CNBC on YouTube.